person in this video is not a paid actor, but an actual SunWest employee.
Buffy the Rate Slayer, and we are here with a new series of weekly market insight right here from the Capital Markets Trading Desk at SunWest Mortgage Company. So thank you guys for joining us for the first edition of the February 22nd Market Insight. Uncertain today is the global response. Stock markets around the world frenzied and hit a record low before clawing back the losses this week, with oil prices breaking above $100 a barrel for the first time since 2014 after Russian President Putin launched an invasion of Ukraine. U.S. markets remained highly volatile and had an indiscernible economic impact. The U.S. dollar strengthened and Treasury prices rallied sharply, pushing yields down by double digits across the curve. U.S. President Joe Biden imposed severe sanctions on Russia and promised to hamper Russia's ability to do business as hot foreign currencies after Putin's decision to invade Ukraine sparked the worst security crisis in Europe since World War II. So you ask, what else is steering the market? Fed Presidents Barkin, Bostic, and Daly all signaled support for raising rates in March and beginning of policy tightening despite the increased geopolitical uncertainty. Fed funds futures are pricing an immeasurable chance of 6 hikes by the end of the year. The jobless claims data for the week continued to paint a picture of a tight labor market. Initial jobless claims for the period ended February 19th declined 17,000, partially reversing a 24,000 increase the prior week. The updated GDP figures in the fourth quarter of 2021 released yesterday shows the nation's economy grew at a 7% annual pace. Seems like Americans boosted spending and businesses rebuilt their stockpiles of goods. Demand for homes is still strong almost 2 years after the pandemic. The home price appreciation measure gained 18.6%, up from 18.3% the previous month. Bitcoin slumped to a 1-month low and hovered around 35,000 after Vladimir Putin's push to demilitarize Ukraine started with a barrage of missile attacks on Thursday. January saw a rebound in spending from a sharp Omicron-driven plunge in December. Personal income increased $9 billion, while consumer spending increased $337.2 billion in January. The saving rate hit the lowest level since 2013. Wow. Everybody's spending their money right now. What's going on? Well, conclusion. Let's get to it. The overall stock market has been afflicted by multiple troubles. Fears of rising interest rates, sizzling inflation, and continuing supply chain bottlenecks. But evidently, Russian invasion of Ukraine has strongly unsettled the financial markets this week. The conflict carries huge risks for the global economy just after the activity was starting to recover from the pandemic. The question now is whether the Russian-Ukraine war will give central bankers a reason to delay the tightening of the monetary policy moves, or whether the further rise in energy prices could spur them on. We will have a clear outlook next week. So that's all we have for the week. Hey, join us again with an updated status on the Russian-Ukrainian war, figures on construction spending, non-farm payrolls, unemployment rates, jobless claims, and so much more. Stay updated with our news, and our trading desk will keep you informed with pricing incentives. Have a happy Friday, everyone, and a fantastic weekend. Buffy, out.